Hello friends, good evening. Today I am coming up with a real business case in Odoo19 related to landed cost. So here is the problem definition. How to apply landed cost calculation, where I am placing an order of 1000 unit. I receive 1000 unit and 100 units are returned and net 900 units are finally confirmed unit which is available in my warehouse. So to offer a different way of satisfy this particular type of business situation, I would like to give two separate ways. Let's do and jump in our database and run this calculation in different way. So I will define way 1 and we will jump into our Odoo19 database, where let me show you my balance sheet and inventory, that is 26,152, which is already available, versus my present stock value 26,152. Everything is net out. I don't have anything. Now I am creating a new product, landed cost 1, like it is a name to refer, and I am tracking this inventory by quantity, and I would like to give AVCO new, where my average costing is there, perpetual invoicing is there, and then these are the standard accounting properties we have. Apart from that, I have created one landed cost type product, a service type product, where I have enabled landed cost and I would like to divide the split as per the quantity. So this is a very simple case I am taking right now. I am doing a purchase right away from vendor with my landed cost 1, where I am buying 1000 unit at rate of 100. So my total value will be 1 lakh rupees. And I am going to receive entire consignment in one go. After that, I will definitely register my vendor bill as on today, and it will hit my valuation immediately worth 1 lakh rupees. To verify, we will go to the accounting balance sheet and see my inventory has been increased by 1 lakh rupees. So earlier 26,152 will increase by 1,26,152. Everything is working perfectly. Now the way 1 to satisfy this need in general business, what I propose, like received 1000 units, that is perfectly fine, and applying landed cost on 1000 units right away. So we will register a landed cost directly on that 1000 units by applying a vendor bill for my freight forwarder, and then freight will be the account. Let's say I am applying 1000 rupees of landed cost. So I am creating a landed cost on my latest transfer for this particular PO47 and checking the division. So 1 lakh worth of LC1 product will become 1 lakh 1000 here, because I have received entire 1000 unit and I am passing this particular valuation to satiate the cost of landing at my warehouse. The case is different. I am returning 100, but let's start with this case. So as soon as I validate this particular landed cost, it will increase the overall product value. Here also I will see the impact of those 10,000 rupees and my valuation will become 1.27. And then at counterpart, if I run my stock report, it will be same 1.27. And my LC1, the product which we have created, the cost will become 100 to 101 because I buy 1000 unit and I apply 1000 rupees. So 1 rupees each has been added over here. Now we see a return of 100 units. So let's do a return on our purchase. So I'm going on my purchase order in receipt and I'm returning 100 unit from this particular stock. So what happens now? 100 units are gone. So definitely if I go to my purchase order, I have to reverse and create a credit note towards my vendor. So as soon as I create my vendor bill, it will pass 100 unit worth 100. So 10,000 rupees of credit note will be created immediately over here. Now if I see my stock valuation, it will decrease by 10,000. And then if I go to my inventory and stock valuation, it will again decrease with the same. But according to Odoo, the cost remains 101 per unit only. Why? Because we have applied entire 1000 rupees on that 1000 unit when we received entire consignment. So that's why the cost applicability will remain 101. But in reality, what happens? If I receive 1000 units and I apply 1 rupees, then it becomes 101. But now I have to recalculate the landed cost, because if I do a return of 100 unit, then what I need to do, I need to maybe recalculate my landed cost and reduce it with those fraction of cost, because I paid 1000 rupees, but now I have to reverse it. So what we can do, we can go to inventory. In my landed cost, I can create a new landed cost with my same transfer. So my transfer was earlier 47, where freight cost was calculated by quantity, and now this time I want to adjust by 100 rupees. So I will give negative 100 rupees and compute. So 1,01,000 of cost will become 1,09,000 by reducing the overall landed cost or freight cost with 100 negative. Okay. And then I will validate it. So over here, now my cost will be reconsidered as 100.90 based on the reversal of the landed cost fraction over there. And then I will see my accounting impact also in balance sheet with 117,062. But at that time, system will detect the variation. To avoid this particular variation, we can definitely create a credit note of maybe reverse of landed cost. And then over here, we can create 100 rupees and create a credit note. So based on this, what happens? My inventory will remain same, but if I want to, take a refund on my landed cost, I can create a note, but definitely my landed cost has reduced. So to satisfy that, we have to run this particular valuation report and settle down the inventory valuation against my variation account over here. So this will generate an entry and satisfy my reduction of overall inventory valuation by 100 against variation account. So this step will clear your discrepancy in the stock, and your landed cost of product will be coming at 100.90 based on the 90 or 900 rupees of landed cost divided into this 900 available units. So this is how the way number one will work if we do a reversal of landed cost by fraction of the cost multiplied by unit. So it's tough to derive. Now I would like to introduce way 2. So we will run the same purchase order with a new vendor. Like vendor 1, I am buying same 1000 unit and with 100, but this time let me create a new product. So I am creating a new product over here, a similar product, so that we can see the difference. And this time I am giving a name of LC2. Everything will remain same. And in my purchase quotation, I will buy LC2. The same 1000 unit worth 100 rupees each I am buying. So during receipt now, we will identify like 100 units we want to return. So here we can divide this particular stock, like we will receive 900 units in one particular receipt and validate, and we create another back order, and then we are smartly dividing entire receipt into 2 receipts. So I have 2 particular transfer meeting this particular receipt divided into 100 and 200. And then before even I am booking the vendor bill, what I will do, like in PO, 1000 received and 1000 or 900 plus 100. So 100 I am returning right away. So I am returning entire consignment of 100 and validate it. So what happened in my PO? Now 100,000 was demand, 900 received. And if I create a final vendor bill, it will create a bill based on the received unit of 900. So my inventory will increase with this 90,000 rupees of amount because I have returned those units. And then smartly we have to create a landed cost. So with my freight forwarder, I am creating a freight bill of, let's say, 900 rupees, which is payable. And then I am passing a landed cost over here with my latest receipt. So those receipts are, we have to map it over here. So this is the receipt we have and compute. So over here, now let me check the receipt. So if I go to my purchase order, PO 48 and receipt number 7. 7 has 900 units. So I will pick 7 number receipt over here. PO 48, receipt number 7 is 900 unit. Yeah, this is receipt number 7 and I compute. So 90,000 rupees of goods will be applied with 900 rupees of landed cost, and new value will become 90,900 after passing this landed cost, and I confirm this bill. So now if I check my accounting and balance sheet, it will be increased totally with another 900 rupees of valuation over here, so that now we can see a difference of, let's say, the landed cost calculation in accounting, in inventory. So Odoo has done the valuation division over here, considering the 900 rupees and divide with the difference of 100. So 90,900 additional cost, but journal entry was created, inventory against the cost of goods sold. So 7 number inward as revalue our entire stock. So if I go to my LC2 product, now price has been updated 100.90 over here, and for LC1 also 100.90, both remains same. So you guys can see that Odoo is smart enough to handle the landed cost applicability and adjust our costing based on the actual steps we are doing over here. Then again we can see the variation is registered for merely 10 rupees of difference because of this entire landed cost logic which we have seen over here. So in landed cost, we have seen, like, from my vendor bill, accounting, vendor and bill, we have 900 rupees of freight which will be applied with a landed cost on my all the original value of 90,000 worth of goods with 900, but we can see the applicability works on the 800 rupees only. So system is very smart and it did its job entirely. So now way number 2, like received 900 and 100 and also returned 100 units. Landed cost is applied on 900 units worth value over here. So these examples will help any user and accountant to use the different kind of business scenarios and register the impact of the landed cost with entire unit or landed cost with received and return. Now let's see way number 3 over here, where we will do another case where I am going to purchase a new product, that is LC. So LC3 we will be purchasing from our vendor. So I am going and purchasing LC3 over here, same 1000 unit worth 100 each. I confirm the order. I receive this time the entire consignment, and then before even passing anything, what I will do, I will return 100 units from here and I validate. For rest of the units now which is lying with me, I create a vendor bill. So my vendor bill will be created on the received quantity only. So I confirm the vendor bill, and in my inventory valuation, Now we can see the 90,000 worth of stock will be added LC3. Now we will do the landed cost applicability. So I am picking freight forwarder. Freight is my product, and I am passing, let's say, 1,000 rupees of landed cost. And I am creating a landed cost on my latest transfer. That is transfer number 9 and compute. So now system will be passing the landed cost on all 1,000 units because I received entire 1,000 units in this transaction, and I validate. In my journal entry, based on our previous example, Odoo is very smart to pass what inventory is available over here. So system V3 is very accurate. It is passing the cost based on the available quantity in the system only. So that when I run my balance sheet, I can see the increased value of inventory with 900 only. And then when I go into my review report, it doesn't create any discrepancy. And in my stock report also, or in my product card, the LC3, let us see where is LC3. It will calculate the exact amount based on the total received and returned and available based on my landed cost. So now you guys can decide which way is better for your business. Like received 1,000 and 100 return, and then landed cost 1,000 units worth, but value passed on available quantity only. So these are the outcome of our all different test reports. So from my calculation, I can see way 1 and way 3 are the better one because system is doing its job accurately. Way 2 will definitely create discrepancies because of the fraction of cost which we register based on received and returned quantity based on the bill arrived. So hope this test will help many people to create and register their landed cost based on the different scenarios they encounter in business. If you have any queries, do reach out to us on techvaria.com or my YouTube channel or LinkedIn, or email us. Thank you guys. Good day.